Hey everyone, Mortgage Nerd here. You know what drives me crazy? When people call to get pre-approved for a mortgage and I say, hey, but don't pull my credit, or you don't have to pull my credit to give me this information, right? It's like, well, do you go to the doctor and you say, doctor, tell me if I'm healthy, but don't draw my blood? No, it doesn't make sense. We have to know what's going on completely to be able to tell you if you're qualified to buy a property or refinance or whatever the case may be. So yeah, we need to run your credit. Oh, well, can't you just tell me if, I tell you my score is 800? And you know how many people tell me their score is 800 and then we pull it, it's in the 600s because they just don't know. So here's the thing. Here's a big, it's not a myth, but it's a misconception that every time your credit is pulled, your credit comes down so much. Oh, but the last time I pulled it, it was 700 and then someone else pulled it, it was 690. Well, what are your credit card balances? Do you have a new collection? Did you miss a payment? But really, the biggest thing I think is the credit card balances. If your balance is over 20% of the limit, then the bureaus look at that as you being maxed out or drawing too much. People don't realize this. They think, oh, I'm not at my full 5,000 limit, I only owe 4,000. That's really bad for credit cards to have that. Another thing people think is, hey, I get my statement and I owe 4,000 and I pay it to zero and I charge that 4,000 all the way back up and then the statement comes out, but hey, I paid it to zero. It doesn't matter. What matters is the date that your statement comes out. I pay my credit cards to zero multiple times throughout the month, but especially a couple days before the date that it's supposed to hit. So let's say it's the 13th that your credit card is due, pay it down so that you have very little balance, $100, $10, somewhere around 20% or less. I hear 25, but I always say 20. So yeah, if you need to have a pre-approval done, we're gonna run your credit. Yeah, it's gonna drop 2 or 3 points in a month because during those 30 days, multiple mortgage companies can run your credit and it doesn't hurt. It only hurts once. Phil Stevenson, Mortgage Nerd. Thanks.